First, the U.S. and Canada. I mentioned the U.S.'s results for the fourth quarter. The preliminary ones look pretty good. And that means for the year, it looks like we'll have growth of 2.3%, which is better than most any other developed economy last year. A lot of it now, that has a lot to do with strength in the service sector. I mean, the manufacturing sector right now in the U.S. is in a recession. If you just take the manufacturing sector, it's been a very difficult time for a lot of manufacturers. A lot of this has to do with trade disputes, a very strong dollar, which is impacting exports, and some other factors. But nevertheless, the U.S. economy, thanks to strong consumer spending, thanks to a pretty robust service sector, managed to grow 2.3% last year. And we're forecast going forward is calling for 2% growth in 2020 and 2021. We're still not forecasting a recession. We haven't. A lot of economists over the last 2 years have already forecast that we should be in recession by now. It hasn't happened, and we don't think it will happen over the next, let's say, 18 months for sure. There is some pessimism. The business confidence indexes that we see are very negative right now in the United States. A lot of the businesses we talk to are pessimistic at the moment, but we still expect consumer spending to remain robust. We expect inflation to remain under control. The big issue for us is more long-term. The budget deficit is about to pass $1 trillion again. That's very frightening because it's forecast to go up to $1.3 trillion in the next couple of years. And if you look at the presidential election that's coming up, you have one side saying we're going to cut taxes again. We have the other side saying we're going to boost spending tremendously again, but nobody is talking about how they're going to pay for it. And that's frightening going forward, that neither side in the presidential election is looking at this risk of long-term debt and this rising budget deficit seriously at the moment. As for Canada, sorry, I didn't touch upon Canada. Canada's had a rough couple of years. Commodity prices have been low. The trade disruptions with the United States have weighed heavily on confidence levels in Canada. We are expecting Canada to start to bounce back, particularly in 2021. This is an economy that should be growing in excess of 2% per year, and we expect it to get back there within the next couple of years. I mentioned the presidential election. That's the key issue in the United States going forward. It's very hard to predict at the moment. Now, President Trump's approval ratings have been remarkably steady. They're the lowest of any modern president at 43% on average, but that's not that much lower than Obama or Clinton were at this point, and they both won re-election. In fact, 8 of the last 10 presidents who run for a second term in office have won. The only 2 that didn't were Carter and George Bush Sr. So he has the power of the incumbency, and we frankly don't know who the Democratic nominee is going to be at the moment. You have Joe Biden, who is the presumptive favorite. He's a centrist. He polls very well against President Trump on a national level. But you also have Bernie Sanders and Elizabeth Warren, who are more to the left. They don't poll quite as well in a lot of the Midwestern states that are going to decide this election. Keep in mind, in 2016, there were 9 states decided by less than 2%. President Trump won 7 of them. That's kind of like your football team winning a lot of games on last-second field goals or in overtime. He won 7 out of 9 of the very closely competitive states. Can he do that again? A lot of that's going to have to do with depending upon who the Democrats nominate and what the state of the economy is as we get later into the year. Another big issue for the United States right now is the continued strength of the dollar. If you're an exporter, you've been suffering for this now for 6 years. We're in a cycle of dollar strength that is almost unprecedented. We've had 6 years now where the dollar has been relatively strong against pretty much every other currency in the world. And that chart, okay, it has the British pound twice. I'm not sure why, but if you look over the last 6 years, the US dollar has appreciated against every major currency, and sometimes quite substantially. If you're doing business in Mexico, over the last 6 years, the peso has weakened by 50% against the dollar. If you're doing business in Brazil, obviously, it's very difficult to export right now. So this has been a major challenge for a lot of our clients who are based in the U.S. and exporting around the world. There's a lot of talk that the dollar is due to come down. We don't see that at the moment. As long as risk levels remain high, as long as the U.S. economy remains relatively healthy, which we're forecasting it to do, the dollar is likely to remain strong well into 2021. So you're going to have to deal with a strong currency at least for another year here in the U.S. So the next developed region we'll look at is West Europe. West Europe had recovered to some degree between 2014 and 2018. You had a weak euro, which boosted exports. You had a lot of pent-up demand when all of these crises in Europe took place between 2009 and 2013. There was not a lot of spending going on. That spending came between 2014 and 2018. It's starting to dissipate now. We saw a very difficult year in 2019 for the European economy. The German economy grew by just 0.6%. In 2019, Britain, which we'll talk about in a little bit, it had been the key driver of growth in Europe over the last couple of decades. It's been struggling because of the Brexit uncertainty. Italy has just basically not grown at all for 20 years. So a lot of these major economies in Europe have been struggling, and as a result, the European economy slowed substantially. And the numbers that just came out this morning for the fourth quarter in Europe were worse than expected. Italy shrank substantially. The Eurozone grew slower than expected, so we've seen very disappointing growth. And if you look ahead into 2020, 2021, it's very hard to envision significant growth coming out of Europe over the next couple of years. You have uncertain export situation. You have domestic demand that's weakening. So it's going to be a very trying time for the European economy, probably for the next 24 months at least. Of course, today is Brexit Day, the day where the European Union loses the United Kingdom, or the United Kingdom leaves the European Union, depending upon how you look at it. They will be leaving at 6 o'clock p.m., 11 o'clock UK time. I spoke in Wednesday in Cleveland at a conference, and the British American Chamber of Commerce were there, and they are having a Brexit watch party tonight. I'm not sure what they're watching. I don't know if the European Union flag is going to be lowered in London. I really don't know what's going to happen, but they are leaving the European Union tonight, basically. And while they're leaving, there's still a lot of uncertainty that there's no trade agreement yet between the UK and the EU. The British assume they can reach one by the end of this year, but there's no guarantee that's going to happen. The European Union leaders appear to be quite skeptical that can happen, so that trade relationship remains unclear. Now, Britain is trying desperately to reach trade deals with other countries, including the United States. One of the most contentious issues right now is the potential trade deal between the U.S. and the U.K., and the U.S. is driving a very hard bargain at the moment with the British in terms of reaching that trade deal. Now, what does this mean for the European Union? Now, imagine if California left the United States. Maybe some of you would be happy. But this is even bigger than that. I mean, the European Union is losing 24% of its defense budget, 21% of its foreign investment, 15% of its economy, and 13% of its population. This is a substantial loss. London was in many ways Europe's Silicon Valley. It's where investors from the United States and Asia went when they wanted to invest in Europe. It was the center number one for investment across Europe. And now it's not going to be part of the European Union anymore. How that plays out remains to be seen, but it is a very interesting dynamic. Another big issue is just the long-term struggles of Europe's big economies. There are success stories in Europe, but they often come from the smaller economies, places like Sweden or the Netherlands or Ireland. They've been doing very well. They're quite competitive. They're economies that have adapted to the need to compete internationally. Unfortunately for Europe, its big economies haven't really done the same. You look at the lack of growth in Italy, relative lack of growth in Germany. France has struggled for a long time now. These major economies, which have not reformed to deal with the challenges of the 21st century, that has been a big drag on growth across Europe. So the other developed region is the Asia-Pacific region. So we're talking about Japan, Australia, South Korea. It was a relatively challenging 2019. You have economies like South Korea and Australia, which are some of the fastest growing developed economies in the world. They slowed substantially in 2019. Singapore had a very difficult year because it's a trade-dependent economy, so it was hit hard by all of these trade disputes. There are very few success stories in this part of the world in 2019. One thing we'd like to talk about, of course, is Japan. I've already mentioned its demographic situation, and a lot of the rich world needs to look at Japan as a warning. I mean, as I mentioned, in the 1970s, 1980s, right into the early 1990s, Japan was the most successful developed economy in the world, maybe the most successful economy in the world, period. It was growing at rates of 7 or 8% per year. Its per capita GDP levels far surpassed the United States by 1991. But since 1992, the economy's grown by less than 1% per year. It's succumbed to a lot of those factors that we talked about earlier, much earlier than any other economy in the world. And now are we doomed to follow suit? Are we doomed because of our demographic changes, our lack of productivity growth, our inability to compete in some regards in terms of trade and investment? Are we doomed to follow the path that Japan has been on for the last 30 years almost? The other issue I'll mention is the Australian bushfires. You've certainly seen this on the news. This is one of the most dramatic environmental stories of modern times. Those maps there show the equivalent of the areas burned by the bushfires if they were in the UK, US, or Japan. And just look how much territory has been burnt by these bushfires. Now, fortunately, Australia did a very good job of evacuating people. The death toll was relatively small. But this serves as a warning for what's happening. Temperatures are rising. We can debate why they're rising. There's no doubt they're rising, and climate is changing. Last year we were here in a polar vortex. That was a rare occasion. This year we're here. It's 34, 35 degrees. There's not much snow. Where I live, we haven't seen any snow. We had 106 degrees last summer in Luxembourg. That's 30 to 40 degrees above the normal temperature at that time. So things are changing, and how businesses, how governments, how regions are going to adapt to this is going to be very important going forward.